How's it going, everyone? It is Thursday, May 2nd, 2024, and this is the video for today. So, to start things off, let's talk about our last pick or picks. And they gave three. The first was the Penn earnings time spread, which I said you can take kind of regardless of the market. If the market had a bearish FOMC reaction, we could take target short. If the market had a very bullish market reaction, we could have taken J&J long. So the FOMC reaction, we're going to zoom into that first just so we know which trades we took. I viewed this as fairly neutral to a little bit bearish. We started here, had this big move up, came all the way back down, and pretty much ended close to the low of the day and formed a nice little bearish hammer on the D1 intraday, not off a relative high. So just tells you that the move is coming down. So I did bid for the Penn earnings time spread, but I did not get a fill because the bid-ask spreads were just a little bit too wide during that market volatility. Penn was falling, so personally, I did not get any trade on Penn. If you did take the time spread and you managed to get a fill, you had probably had a chance. If you took the 1650, you had a chance to get out in the first minute of the open and came back down, and now the stock is actually rallying. So even if you didn't get a fill here, you may have a chance to take a smaller loss or a scratch at this point right here. But Penn I'm going to count as a no trade. I did not take J&J, but I did take target short. And I want to talk about target short because it is a interesting exercise in trade management. So I'm going to go over my target thesis here. This may take a few minutes, a little bit longer than a usual point because there's a little bit more trade management that's going to be involved here. So I took target, and here's my bias on target. So when I had the market D1 yesterday and the target D1, my market D1 bias was maybe a -1. I thought we would test the 100-day SMA and potentially check this low from April 19th. My stock D1 bias was a -3. I loved this relative weakness in target. It didn't really bounce at all with the market. You can see how the market had rallied from the 19th to the 29th. If you look at what target did from the 19th to the 29th, pretty much just did nothing. As soon as the market gave away, this stock started to break down. So I really liked what I saw in target, and I opted to take a PDS because for two reasons. One, I expected this move to happen in a pretty short time frame. Two, I wanted to limit my downside risk versus taking an in-the-money put. So I'm trading the reward of the in-the-money put for a smaller risk because my debit is much lower, and a smaller reward. Dollar-wise, maybe not percentage-wise. So that was my expectation, and I took the 157 or 157.50, 152.50 at the money PDS on target that was expiring this week. And the this week expiry is the key, and that's really the main aspect of the trade management for this move. I expected we would test this SMA today or tomorrow. So I didn't have any plans to add. I don't really add to CDSs. I'm sort of here. I set my target and then I get out. Because I have no plans to add, I also don't expect to scale out of the trade. And when I exit target, there's a couple scenarios that can happen. So let's look at the profit scenarios first. The first profit scenario is that target does reach the 100 SMA. My trade thesis is valid and I take profits. So nice move here. The much better case scenario is that the market has a gap down. Target has a gap down below the SMA. It exceeds my profit target. I'd also probably take profits in that regard because it did better than I thought. And, my duration of the trade is not to stay in super long. The third scenario is that the market moves down lower, target moves down lower, but it's not really relatively weak anymore to the market. It gains some relative strength. So I have to take a smaller profit than I had originally planned to on the trade. So those are sort of my 3 profit options. Now, the first loss scenario is that the market, maybe the market moves down and the stock rallies. So we may see that today. I'm gonna have both these up. We could have a really strong bounce in the stock, which I did not see as likely, but look, that could happen in terms of planning out my plan. Very strong move by Target. We also see that maybe we have a gap up in Target, a gap and go, and we have a nice bullish engulf on the stock. That would be very bullish. And we also have the market. If the market finds support before the 100 SMA and rallies and takes Target up with it, if Target loses its relative strength, maybe it's flat relative to the market, then I'm not going to be really crazy about it. So really the main thing here is, if the market doesn't do what I expect, does the stock do what I expect? If the market goes up but the stock produces down, then I'm still good for the trade. If the market goes up and the stock goes up, then I have to adjust my bias. And so that's what's happening here. So if we zoom into what's happening in the market today, and we look at what's happening in Target today, we can see our story. So market had a small gap up. Overseas markets were strong. Came down, tested the low of the day, and we tested the $500 level. We know that there is some D1 support here. We got a bounce off this level. And then sellers try to knock it down, but buyers held the bid over here. We came back up, and now we tested this high of the day. And as we started to break out, you can see how the price action is becoming more orderly. So earlier in the day, my market bias was mildly bearish. Later in the day, it became more neutral. And then even more later in the day, it became bullish. And this was the key clue here. We had this bullish or this bearish engulfing candle off the high of the day. Bearish won a P-cross. This is the chance that bears needed to push the market down. When they did not get that chance, market started to rally, right? You can see how we held all of the gains here. That means people are buying. Buyers are supporting this move. Sellers are unable to knock it down, and then they kind of give up, and we get this next leg higher. All happening during the bearish 1 OP cycle. Then you get this nice bullish cross. The market's already tested this new high of the day. We've hugged the high of the day during the bear cycle. We have the chance to produce on this move. So the market bias had changed throughout the day. What did Target do during this time? Well, if we look at Target in the beginning, and I'm going to take off the SPY overlay just so it's a little bit cleaner. Target had a nice red candle. It did gap up, but it's not the end of the world. Gap up had this nice red candle. Okay, pretty good. Then we got a pretty strong move off of this candle. And this was the first warning sign to me that said, hey, if there were really sellers, we wouldn't really see them get this far up in the stock, right? If there were really sellers, the price wouldn't get that far up. Buyers would at least be able to control it a little bit more on an intraday basis, especially while the market is going down. If the stock had bounced at 1010, then I'd be a little bit more interested, but the stock did not really bounce at 1010. It bounced in the middle or the beginning of the day. So we come back down, test VWAP, come back down, test this high of the day, which coincides with this minor support level yesterday. You can see there's some support here. We get this double top, and now Target is coming down. So this is the chance for Target to prove itself at 1220, at 1225, right? We're making the strong move down. It's losing its relative strength. It's becoming very relative weak as the market is doing nothing. But around 1220, around 1225, market starts to rally, and we can see that the market rallies, and Target is actually doing pretty strong in that first leg of the rally. So it's gaining some relative strength. All this tells me that there are buyers here in this stock. And if I think about my previous scenarios, I expected Target to reach the 100-day SMA in 2 days. That was really the thesis of the trade, and that's why I took a PDS. Given what I'm seeing in the market, given what I'm seeing in Target, I do feel like that is less likely. It still could happen. I'm not saying it's not going to happen, but the real question is, will it happen during my time horizon? So it's going to depend on what the Apple earnings are, a little bit on the unemployment tomorrow, how those fare, and really what the market decides to do at that juncture. So my overall bearishness on the market and the stock have been tempered. My market bias is now a little bit more neutral. We're just chopping back and forth, and you can see how I've drawn this really wide bullish channel. And I think it kind of gives some structure to what's going on right now. So that's what I'm seeing kind of in the market. We're in this wide bullish channel. If I look at target here, we're in this downward sloping bearish channel. That's the low of the day over here. Nothing really coming in the way of support. So my new revised thesis is going to be, I want to see a pretty weak close here in the market and in the target and in target. I want to see how we close for today. And tomorrow, I know that we are going to retest this level, and it's probably going to be on the open, right? Target makes its big moves on the open. So my plan is to take my profits at this retest of support over here. And now it may break that support, it may not, but I don't quite have the time on my side anymore. I'm running out of time. This is our up cycle in the stock, and maybe if I zoom out to an M15 chart, I think it becomes a little more clear. We drop down, pull back, drop down, pull back, and we need to make a new low of the day. I don't know if we're going to make a new low of the day, so I'm going to target the prior low over here and take my profits on the trade. This could be some resistance that the stock is hitting, and you have to also consider both the options that can happen. The first option is we hit this level and we break through. The second option is we hit this level and then we bounce. And what I have to think is which outcome is going to be more likely given all the information happening in the stock and in the market. If the market is pretty neutral, we don't have a lot of market tailwind, I don't know if this level is going to break. So I'm more leaning to the fact that this level is probably going to hold, and I don't have the time to see if it's going to break or not. So we're still on target, and I still took the trade, but I revised my thesis. So I no longer believe it's going to test the 100-day SMA. I believe it's going to test this $56 level. You can see this low right here, 55.80. So somewhere around 56. I believe that this level is going to be tested. And I know that both buyers and sellers are active in the market. All right, neither side has a ton of control in the shorter term time frame. So far, the market has been pretty choppy so far over here. Don't quite know where it's going to go. And we want to keep the trades short term. With my PDSs, and this is sort of a personal thing, I know that big losses really pull down the profit factor of the strategy. So you have to know in the PDS what are the warning signs in the stock and what are the warning signs of the market. So I know I have a great pick. I know I have a good entry. And I like the setup that I took, and I would take the setup again. If the setup did not really produce, and it's not really hugging the low of the day, it's not showing me that relative strength, I am going to take the exit on the stock when I can, take the profits on the stock when I can. I know I entered around here, 157.15, so I have some time to make profits on the low of the day. Okay, so that is our those are our trades for today. Let's look at the market context right now. So my long-term fundamental bias in the market is still a 1. We had the FOMC statement yesterday, but you can see it was really not a huge reaction one way or the other. We didn't break out of the 100-day SMA. We didn't break out of the 50-day SMA. We kind of started pretty close to where we started. We kind of ended very close to where we started and maybe a little bit lower. So I viewed it as slightly bearish, but really, to me, did not change the story of the chart. We had some other stuff with employment and ADP and JOLTS, but I'm going to wait till the unemployment number that comes out on Friday, and then we're going to kind of take a look at all of this data together after the Apple earnings as well, and we can evaluate really what all the fundamentals are coming down to. What do they indicate that asset managers are feeling? Now, technically, long-term, I am still a 1 bullish right now. Again, we still have to respect the strength of this move. We still have this pullback over here, but the move up is not very strong. So we are at a juncture where this long-term market bias can change, and it depends on where we break out. if we break out through this low, through the 100 SMA, my long-term market bias is going to be more neutral. Why? We had the strong move. We had this pullback. This was the chance for buyers to make a move. We had this upcycle. If we did not get the move and instead we started to break down, that tells us that sellers are in control. Our long-term market bias is neutral and our shorter-term market bias would be bearish. If we break out over here to the upside and we start to see some more consistent price action, some more tight, orderly price action, my market bias would become a little bit more bullish because it tells us that buyers have the ball, they're back in control, and this market is going to go higher. Short-term technical market bias is a 0. We are wedged between these two SMAs and we got to get out of here. There's not a lot of opportunities to be taking any sort of meaningful trending trades. Shorter term trades such as day trades and call debit spreads, put debit spreads are your best friend. You find relatively strong stocks, set more passive targets, and then take your gains. We also may have an opportunity to sell premium. I wouldn't get too crazy with selling premium because I want to see, again, some of this news hold up, kind of this market get through some of this news. We're through most of it. And I also want to make sure that the 100-day SMA holds. I like to see a test and a bounce off that 100-day SMA before I start to sell some premium. But that might be something to watch. Look for stocks that have high IV. You can sell out of the money naked puts. You can sell put credit spreads. Maybe weekly at the monies, but those are a little bit more advanced, so make sure you know what you're doing with those. But there's some opportunity to be more passive. We don't quite have the trend that we did before, so our strategies are going to have to change. And you can see that in the picks of the current videos. I mean, before it was like, the last time I really took a nice short-term swing was Google long. That was the last short-term swing I took about a month ago. I took Google long on the 11th. I think I called it out. Did I call it out on the 11th? Oh, no, that was a day trade. Maybe I didn't take it when I said it then. But last stock I really took here, Google, Cat, RTX, all at the beginning of April. Here's RTX long that I took here, and then we took profits on the next day. All of these were the beginning of April, and since April, we really haven't been taking a lot of longer-term swings. Some PCSs, some day trades, some CDSs. And more recently, some earnings time spreads. So I talked a little bit about the market bias intraday. Today we have a bullish reversal. We tested this 500-day SMA. Bears had a lot of chances to bring this market back down. They weren't able to. Buyers have control and they're rallying it back up. The real question is, can they actually get anything going on the D1 chart? So, pick for today. If we look at what's happening in the market, I view this as a little bit more bullish, that we managed to hold the gains, but slightly bullish. So, I'd either try to find maybe you can do a CDS on a strong stock expiring next week, or maybe an overnight swing. Let's look at a couple of stocks that could be really nice as a long for an overnight swing. So the first one that really caught my eye here was VST. I love the strength on the past 2 days, and now it's broken out of this compression. Super strong stock. I traded this actually as a parabolic stock somewhere back here in March and took some nice profits over here. The stock has held up pretty well during this market decline, found some support at a VWAP-E, and has really rallied with the market as soon as the market stopped selling off. So I like VST. The liquidity is not terrible, or not the worst, but it's not the best. But I like the VST as an overnight swing. That's probably going to be my long pick. Maybe target like half an ATR move on this kind of stock. And excellent price action today. Just nice, tight, orderly price action. Great volume. And just really kind of moves up very strongly. So VST long is probably going to be my overnight pick of the day. And I would target something like $1.50 move on the stock. I think that is pretty reasonable. The other pick that I like on the short side was Lulu. So we're going to take a look at Lulu, see if it still is holding up here. Yeah, holding up very nicely. So you can see that Lulu has a very bearish D1 chart. On the 16th, it started to pull back here. It started to stack some red candles and started to stall a little bit over here. We broke compression to the downside. We started to make a new low of the day. We got this fresh LRSI cross on the stock, which I really do like. It does have a little bit of follow through. So Lulu is probably going to be my short pick of the day. And you can do either shares or a PDS. Again, I'll target like a half an ATR move. So you get something like 450. That would be a pretty nice win on a stock like this. And that's probably how I would trade Lulu. And then our neutral pick is going to be a time spread. So a couple of nice time spreads today. The one that caught my eye the most, so I like to have very low times exceeded. Ideally it's 0, but the 6.67 is pretty good and a high difference. So if it's less than 10, I like to have a difference of at least 50. There's two stocks that meet that, X and Lulu. I think with the option stalker data, this doesn't quite match to what I see on my Tradeer account because I think this is pulled from the beginning of the day. So this difference on X has actually shrunk. It's closer to 0.3 instead of 0.5, so it doesn't give me quite the risk reward that I want. But the one I liked quite a bit was Hershey. It's not as liquid as I would have liked, but still pretty decent option liquidity. You can see a couple of things that Hershey is a very slow moving staples stock. Doesn't really do a whole lot. And it doesn't really exceed its earnings. It is priced to have about a 2.5 times move on here versus the average move. The expected move is priced much higher. We're getting a pretty nice difference on this stock. So Hershey time spread is going to be your pick. I got in at a 60-cent debit. And given that it's a Friday, I would target a 50% gain. You could probably get even somewhere close to like 100% gain depending on how much it collapses. But I think a 50 to 60% gain is pretty reasonable on that stock. So Hershey time spread is that pick. And yeah, so those are the two trades for today. VST long, Lulu short. Either be very nimble or very patient. I'm leaning more towards the nimble side because I don't know which way this market is going to break out. So yeah, that is it for today. So I'm going to add all these over here. We have Hershey. We already have our target short, so we're going to have VST long. And another thing to keep in mind too is when the market is pretty neutral or chopping around, I like to have a balanced portfolio, so a mix of longs and shorts, and I don't like to have too many open positions. So in a strong trend, I can have somewhere up to like 5, or maybe like 10 open positions. In a weak kind of, motionless market, I like to be balanced and like to have less than 5 open positions. I don't want to be managing too much. I want to take the position and I want to be in and out. So these are my two picks. You can see I have one neutral. VST and on are my bullish picks. Target and Lulu are my bearish picks. Let's take a quick look at on today. Really nice reaction. Tested this level and has moved back up. So on posting another nice set of gains, testing this level once again. And we're going to see what happens this week. And that'll decide whether we need to close on early or if we would like to stick with it and see if we can get the full profit potential on this stock. Thanks for watching, everyone. These are the picks for today, and we are going to take a look at all these trades on tomorrow.